Here we go. Test recording here. What I'm going to talk about is this, I guess. So basically what you're looking at here is an assignment of a real estate um, sale and purchase agreement. I just shortened it out for that. That's not the actual acronym for it, but at any rate, real estate sales and purchase agreement. I have a purchase contract on a property that I've been buying, and I am partnering up with one of my long-term partners over the time since 2008. We've done a couple deals together and had good experience with each other, and so on this one we're going to do a 50-50 partnership. In the past, what I used to do is set up the partnerships where I would do the construction. I would be the construction superintendent, kind of overseeing everything, and then I'd hire a general contractor who would have subcontractors to do the actual work, and so I'm basically managing the manager in that capacity. I'd have to go out and look at the property a couple times a week, maybe an hour each time. I have to make a few decisions on what direction we're going to go with cost of materials for paint, appliances, everything else. And so, there's going to be, I guess, all in all, about maybe 10 hours a week that I'd spend on the construction management side. And the event that there are things that go wrong, which do happen, and they do happen often, you need to go out there and figure the things out. So they opened up a wall and it wasn't it wasn't to code. The electrical, we discovered there's aluminum wires and we need to replace them, or whatever other situations may be that would cause us to have a both time and cost relevant event that we need to address. Then I would go out there and look at that and figure out the situation and determine what we need to do to solve it. And so that would require extra time. So I'd be putting time in there, and my 10 hours can turn to 20 or more. And you multiply that by multiple partnerships. And so I was taking on 3 or 4 partners at a time with different projects. Some of them were partnering on up to 3 deals at a time. So, I had, somewhere around 10 deals going simultaneously at any given time would be my peak. And then on the slower times, we have a couple deals going, and there are various levels of construction. One may be completed, and we're just doing touch-ups here and there and maintaining the property as it's getting ready for sale, and the others are just starting. So we're at various stages in the construction process, and I would manage all of that. I'd also acquire the properties, go out there and market and find properties, put them under contract, meet with new investors, figure out the best exit strategy for us. If we partner, then take that on as an additional role. So as you can see, the time really compounds itself. It is not scalable when I am the principal and the person that's going out there to find the deals, and the person that's going out there to partner with the deals, and the person that's going out there to manage construction. So in this case, what I decided to do is work out an agreement where the partner would do all of the construction, superintending and making all those decisions, managing the budget, keeping a set of books, and he would report to me what's happening. And when the construction is completed, then we would jump in on our role, which is marketing and sales. And I have an agent on staff, and that agent gets a small commission instead of a full commission. And this is part of an arrangement that we have, and sometime here soon, this is 2015 October, we're going to get a broker's license and household a brokerage. So we'll do brokerage and have agents that work under us that will handle all the listings. So again, these elements are helping us to free up my time, so I can get out there and find more partnerships, put together funding and other things that I need to do that are income producing for us, versus the the time consumption items that don't necessarily make the money, at least right away. with management of construction. So here's the contract, and this is my partner on this deal. This is doesn't have the address of the deal here, nor does it have it signed, but you get the general idea here. Now your attorney will want to draft up your version of this partnership agreement. Oh, you know what? This is the assignment. Okay, so this changes everything. All right, so we have a durable partnership agreement and we have an assignment. Okay, let me backtrack here. With this, what I've done is we do the partnership, which is right here, and then right here we are assigning the contract to my partner because he's actually getting a private loan on this from an individual who's going to fund the entire project. So he's putting in, I believe, $105,000 to fund the project. The money's actually already in there at title, but we haven't closed yet. We're going to finalize these documents. And not to give you too many details, but basically we are doing a new durable partnership agreement with some more specific language in there and so on and so forth. Which I'll show you my version, but there's going to be a more detailed version, which, you know, that's between myself and my partner and the attorneys. I would suggest you to as well get your own attorney to draft up your documents, or you can use mine if you want to get a referral. I'll introduce you to them. But at any rate, this gives you a general idea. So we have the house, we put it under contract for purchase, and then I'm assigning my purchase contract to my partner. He's getting the loan and securing the loan. We are signing a durable partnership agreement where we split proceeds when and if they occur 50-50 in this particular case, and then we go from there. So we're signing the contract. There's $100 here. I'm actually receiving a $5,000 buy-in from my partner, and then we're splitting 50-50 after that buy-in. And the buy-in is to cover my costs of overhead. I have my advertising expenses, I have my office staff and employees, and it takes me time to go out and source these deals, and I go out and put them under contract directly. So I'm actually driving out, spending 3 hours with the seller of the property, negotiating the deal, and sometimes that 3 hours can turn into 5-10 hours. From multiple appointments and follow-up phone calls and so on and so forth. And when it comes time to get the deal done, I'm about 10 hours into that too, somewhere around there. So usually I won't do things that are taking more than 10 hours of my time on any given project because I'm running the company as well, so there's a lot of decisions I have to make. And this is something that that would be best to limit my time on certain non-direct income producing activities. So at any rate, purchase contract, which just pretend it's right here, assignment of that purchase contract to my partner. He funds the deal. It will be bought under his company name. It will be owned by his company, but we will have a durable partnership agreement, a two-person partnership on this particular deal, and this would outline, you know, the name of the company that we're going to form. We're just forming a partnership, it's not an actual company. He has an LLC, I have an LLC. You can see Capital River Group, and mine is Asset Distribution Services, which, you know, my branding is House Buyers Direct. It's my company that goes out and buys properties, and this is the trade name for that. But my company is Asset Distribution. And so we set this up. We set up the name of the business, principal place of business, terms, capital contributions. We're each putting in $50. We're going to fund an account. You know, that'll happen. It's just a technicality. And then roles and responsibilities of the partnership. I will be the acquisition, marketing, and sales partner in this, and these are my roles. He will be the financier and construction partner, and these are his roles. Now he will be doing, and here's my payment for the assignment of the purchase and sale agreement, which you just saw a moment ago. And this will be, you know, the buy-in, and then so all my cash expenses, which it cost me less than $5,000. probably running me about, at this moment in time, $2,200, and the rest of it is a little bit of a profit. So um, that's what my buy-in is. Sometimes I'll ask for more, and just depends on the situation. If there's a lot of equity in a deal and I put together a really good deal and I want to partner, but I don't want to give away all my equity, we'll negotiate. We'll work things out. So at any rate, disclose how much I want to make, profit and losses. How does this pan out? How do we get paid at the end? What is 50-50? The definitions of all that: banking, accounting, management, transfer of partnership rights. If there's a termination of partnership, what sort of agreement do we come to undo the deal? Withdrawal, partner death, buyout. These are things that you need to address, and so you want to go through all of these items and make sure that you're all on the same page, that you agree to what the roles and responsibility of each person is when you're entering this deal, not in the middle of the deal. So if someone asks me to start jumping in on construction, I don't have to do that. If I want to, just for the sake of being a good partner, then I will jump in temporarily. But my role is to get it sold. My role is to also find the properties, and find the partner and put everything together. So I'm plenty busy on what I'm supposed to do, and the deal is, if I'm giving you 50% after my buy-in, I'm going to want you to manage all of the construction. So I would take on partners that are experienced. I need someone who has at least 5 years minimum of construction experience in renovation. And so, we need people that have a group of contractors and know how to manage a crew and know how to contain costs, because these are all the things I know how to do. And if I bring in a partner, they have to be able to do that as good or hopefully better than me. Construction, to me, is not my preferable use of time. It's rewarding seeing a house getting finished, but I don't want to have to manage everything and be responsible for so many different elements. It just takes a lot of time, and so that was my decision. So that we sign this partnership agreement, we each sign and notarize it. It'll be, again, all through an attorney, and that's pretty much it. So I will minimize both of those, and so that is pretty much what I set up in terms of the paperwork on a partnership. And you can do partnerships of different percentages. You can take on all the roles yourself. You can just ask for the money as a partner, and they can sit as a silent partner. You can give them 90% of the profits, or 10% of the profits, or 50-50. There's many different ways to do it, but the bottom line is you want to get together with a partner, spend time in the right areas of the partnership. Each person has their own roles, and they know what to do, and they hold themselves responsible. And you will get through the construction process, you'll get through the sale process, and you'll make a profit, and you'll be able to do another deal and another deal and another deal. But partnership is a great way to go when entering this business.